Good afternoon, everyone, and thank you for joining us for the final session in our Money Matters Express web series. I'm Stacey Malcolm, Condominium Manager and Resource and Compliance Officer with Condominium Management Group, and pleased to be your moderator for this session. We are pleased to welcome Tuan Lee of Ousley Hanvey Clipson Deep LLP Chartered Professional Accountants, who has joined us today to discuss the financial audit. Tuan, or OHCD, may be familiar to many of you, having worked with them for your audit, or maybe you've seen Tuan at one of his colleagues presenting at your AGM. Tuan provides auditing, corporate tax, and accounting services to his diverse range of clients, including charities, condominiums, and private enterprises. Welcome, Tuan.
Thank you very much, Stacey. Thanks for having me.
So for today's session, we're going to be looking at the audit process in terms of a timeline, from reappointment at the AGM throughout the year until the subsequent AGM. For the purpose of today's discussion, our timeline will be reflective of a corporation with a December fiscal year end. We will also be basing this on the assumption that the auditing firm has been reappointed. If the ownership votes at the AGM directing the board to go to tender for an auditing firm, it is handled similarly to any tendering process. So starting at the AGM at the beginning of our timeline, Tuan, when should the auditor be notified they've been reappointed?
Typically, the reappointment should be sent to us via email or phone call within shortly after the AGM. No particular timeline, just as long as we're given notice before the next year end so that we can book accordingly.
Perfect. Okay, great. So when does the auditor reach out to book the field work, and when should the field work be booked?
So we typically give our clients anywhere between 6 to 8 weeks post year end on an ideal basis, because the months in the year are busy. It's very cyclical, especially being in an accounting firm. December and March year ends are very busy. So at those months, you might see, the bookings a little later than 6 to 8 weeks. But in an ideal world where, the months aren't so busy, it would be about 6 to 8 weeks where the clients would have time to get all the bills in related to the year end, set them up as payables or pay them, and anything else that they need to do to prepare the year end.
Perfect. Now, has COVID had an impact on this timeline?
It has, in the sense that audits have become a little less efficient in that, like our firm, our policy, we would prefer to be face-to-face in the management firm's offices and premises in order to, actually talk to the accounting department and the property manager, because if there's questions or problems, it gets pretty much resolved right then and there. Whereas, we do an audit out of a box. If we have issues, we email or make a phone call, and we typically may not get our answer or documents right away. So COVID has made the process a little bit longer.
Yeah. Okay. Now, you talked about the process of the fieldwork and how COVID's had the impact. Now, can you talk a little bit about what the fieldwork itself entails? Auditors aren't just looking at the numbers, right? There are other elements?
Correct. So when we reach out to the property accountants and the property managers, we ask for 2 sets of documents. The first set, obviously, is the financial accounting documents. Statements, schedules to support the financial statements. But then we also require what we call the non-accounting supporting documents, like budgets, basically from the property manager, like budgets and minutes to AGM and board meetings. Any legal correspondence, if there's been any legal issues, legal claims in the year. We even look at the status certificate, the reserve fund study, contracts in the year that have been awarded in the year. And we use all of those non-accounting reports and documents to cross-reference and support the numbers so that, everything is above board.
Okay, perfect. Now, in terms of materiality, can you speak a little bit to that?
Right. So, as an auditor or as auditors, we don't look at every single bill or piece of paper down to the last penny. That would be super inefficient and would be very costly as an audit. Therefore, every audit client, whether you're a condo or a charity or even for-profit and other not-for-profits, there are levels of materiality, and that ranges in percentage-wise and what we use, what numbers we use to apply those percentages to. Typically, condo corporations, usually between 2 to 4% of average total recurring revenue. So, if 1 year your total revenue is of recurring, and that's really important as well, is $1 million, and next year it's let's say 2 million, then the average over the 2 years would be 1.5, and you take a percentage of that.
Okay. Interesting. All right, good to know. So moving on to kind of the next step in the process, as many directors can attest, there are a lot of forms, either for board information or that require signature throughout the audit process. So we're going to take a brief break from our timeline and look at some of those that are received prior to the draft financials. So we'll start with the audit engagement letter. Tuan, if you want to speak to these letters kind of as we go through them.
Right. So basically, the engagement letter is us communicating with the board of directors to basically indicate, what our audit entails, and basically to engage the corporation in the audit.
Okay. There's also the audit independence letter.
And so the independence letter is us communicating to the board to ensure that, or to communicate with them that, our firm is independent from any of the interests of the corporation with the board members, so that there's no related parties between the two entities.
Okay. And we have the audit planning letter.
So the audit planning letter gives the board a brief understanding of what we plan to do in our audit, and that also outlines the materiality and what we need from the corporation in order to properly complete the audit.
Okay. Before we move on to the next one, we did have a question in the Q&A, just asking for a bit more clarity on what materiality is. So before we move on to our final form for this, if you wanted to speak a little bit more, kind of explaining what materiality is.
So like I mentioned, materiality is a level of a dollar value level of which we look at, for instance, the bills. So let's say your average revenue, condo revenue in the year is, let's say, 100,000, and let's say we use 2%. So then the materiality of that condo is roughly $2,000. So anything under 2,000, we typically will not review. Anything above that, we will review to ensure that there's it's accurate, that it is for the corporation, that it's appropriate, and that the goods and services were indeed delivered and received by the corporation. Now, with that said, our firm, we in the course of looking through the paperwork, if we see something that piques our interest that maybe even is below materiality, we'll give it a quick look just to ensure that that is it's appropriate.
Yeah, and just to reiterate for our directors, again, the materiality, that kind of benchmark, that threshold does vary based on the size of your budget. The example Tuan used was based on a specific amount, so it's not like that 2,000 is across the board. It is, again, very dependent on your budget. Perfect. Well, thank you very much for clarifying that. So on to our final form here is the bank confirmation.
Right. So our audit, we cross-reference, a lot of numbers just to ensure that, the figures that have been reported in the statements are correct. So this is just one thing that we do cross-reference with a third party, which is your bank. And so, a member of the board signs, or the signing authority signs it, and then sends it back to us, and then we send it off to the bank. And the bank then confirms with us the balance of your bank accounts at your year end, so that we can be comforted with the fact that the numbers in your books are adequate and not false.
Correct. That they line up exactly. Yeah, that they line up with what is in fact in the bank. Makes sense. Definitely. Yeah. Okay. Is it also common to see risk assessment or similar kind of questionnaires, a section of which typically specifies that members of the board must complete it? So Tuan, this is a fairly common thing that we've seen throughout auditing firms where, there are those questionnaires. Does OHCD have something similar to this?
Yeah, so during our audit, we're constantly assessing risk levels in all the segments of your financial statements in our audit process. The one thing, and we also do a walkthrough when we're with your property accountants to ensure that the process for revenues, the process for expenses work properly. But the one thing we also send out to the board prior to the field work is what we call a board communication regarding fraud controls. And so basically, we take the opportunity to ask the board, and really to kind of give them a gentle reminder of their duties to have in place internal controls that forces them to review fraud controls to so that they're properly monitoring for any situations where fraud could happen.
Okay, and what kind of, are there specific questions that you have offhand that typically are included in that, like just for the wording?
Yeah, so we'll ask them, if they're aware of any instances of fraud, what segments of the corporation's operations that they think can become fraudulent, and then
are at risk almost of being
at risk, exactly, and then what their own processes are to prevent it. So, do you review the bills that you sign checks for it? Are there more than one check signatories? So things like that. So yeah.
Okay, perfect, cool. So we also see here at Condominium Management Group, we do see confirmation letters to corporations or associations legal counsel requesting details, if any, relating to claims against the corporation or claims that the corporation is involved in. Typically, that will involve a monetary amount. Though the audit process is essentially the same firm to firm, there are slight variances in just how they're executed between, say, OHCD and perhaps a comparable firm. So getting back to the audit itself, we've talked about the field work and all the materials the auditor needs to provide to prepare and provide the statements. How long after the field work can the corporation expect to receive the draft audited financial statements?
So once again, ideally, also with a caveat that that we get all the documents that we ask for, and then the audit process has gone smoothly, that there's no big issues that we need supplementary answers or documents for. Typically, our firm, we try to turn audits around to provide drafts to the board between 4 to 6 weeks after the field work.
Yeah, perfect. Because when we spoke prior to this, you had indicated that, if the stars aligned and everything fell into place and it wasn't based on a December year end, you had the bodies, you had all the information, even the quickest would be say 2 to 3 weeks, but that's an exceptional situation for
Yeah,
sure.
that's usually typically like a small condo. There's not too many issues. Well maintained. The accounting is well done. Then yeah, it's fairly quick. But you have ones that 200-300 units with shared facilities, with green features. That's not going to be 2 to 3 weeks.
No, absolutely. Even if the best kept records and the most organized board and condominium manager, it's a matter of those variables for sure. Is there anything that the board or the condominium manager could do leading up to it, or how, any kind of tips in terms of facilitating a faster turnaround, assisting you in getting the information that you need?
Our firm, when we reach out to book the audit, we send a list to the property managers to send us everything. So, the board obviously will be aware of when the auditor books the audit, and so, I guess the question a board member can have is, once they're aware that the audit has been booked and it is starting, just to in a board meeting, hey, property manager, how's the audit going? Do they have all they need? So, and as long as that's been answered in the affirmative by the PM, then we typically don't really reach out too often to board members unless there's some real big problems. If your auditor is reaching out to you, there's a big problem.
Good to know.
Because we trust the PM, that they are our main point of contact along with the property accountant. But if there's an issue that we think that there's some independence issues between the PM and the corporation, then we'll reach out to the board and talk to them directly.
Right. Now, they being your client.
That's right. That's right. It's the corporation is our client, not the PM or the management firm. And we've had instances where board members have reached out to us, and we're more than happy to to converse with a board member. Sometimes if they do reach out and it's and the question is really more appropriate for a PM, I have said, with all due respect, your property manager can answer that for you as well.
Okay, makes sense for sure. All right. So again, we have the drafts. The drafts have been received. Can you explain for our directors what a qualified audit is, what that means?
Right. So a qualified audit is not a good thing. Qualified audit means that there has been deficiencies in the accounting process that has either led to numbers being understated, overstated, and not being able to, for the auditor, for us to not appropriately audit the figures. And that would typically be in the auditor's report, independent auditor's report, under qualified opinion, and we spell it out there in black and white so that the readers of the financial statements are well aware. Now, please keep in mind that this does not relate to any deficiencies or non-compliance issues with the Condo Act. This is purely for accounting practices.
Okay, and so again, because obviously there are financial elements that a corporation needs to be in compliance with the Condominium Act, say in terms of the reserve fund study being undertaken every 3 years, or the proper payments being made to appropriations, being made to the reserve fund. Where would an owner or a director see those concerns or elements that require notation on the audit?
All right, great question, great point. So also on the independent auditors report, our firm, I think most firms, will have a paragraph called other matters, and that is where we put any non-compliance issues with the Condo Act. This does not mean that the audit has been qualified. It just means that there's other issues related to compliance with the Act that we want to disclose to the reader.
Okay, interesting. So we're going to circle back because we've had another question. So kind of circle back almost to the beginning. So does the auditor actually initiate the audit? So again, the owners will either reappoint or request that the board go to tender, and the board will follow their normal tendering process if it's the latter. So as they would with any other contracts, not really what we're covering in today's session. But in the event of appointment, so Tuan, when you and I had originally spoken, you indicated that oftentimes OHCD tends to be reappointed. Not that this is a plug for OHCD, but you tend to be reappointed, and oftentimes it is in fact your office reaching out to the property accountant and the property manager to initiate the field work for that year. But would you say that that description that the auditor initiates the audit is accurate, and how would you speak to that?
Honestly, I don't know what other firms do. I know, our firm policy, but we are very, we take the initiative. We always reach out. It's not often that for any firm, for any of our clients, it's not often that a client reaches out to us. For us, it's purely just so that we can properly book our schedule. Mm-hmm. To how we want to book it. So
no, it makes sense for sure. All right, so back to kind of talking about the audit process. So let's talk a little bit about deficits. So when you see a deficit on an audit, let's speak to that a bit.
Okay, so I guess a condo corporation has two funds, the operating fund and the reserve fund. So on the operating fund, when I get this question at AGMs, I always say theoretically, as long as your operating fund breaks even every year, and then you have, some cash flow in order to, pay for your operations, on a monthly and yearly basis, then that's fine. However, the reserve fund really, the fund balance should be in line with what the reserve fund study says. So as you all know, the reserve fund study has to be completed every 3 years per the Condo Act. So, the fund balance, basically the equity for the reserve fund, should be in line with what the reserve fund study says should be that balance for that year. Now, with that said, we all know reserve fund studies are sort of reserve funds, and the timing of the replacement and repairs of common elements varies, constantly, because even the best engineers and property managers and boards can only guesstimate the useful life of common elements. Sometimes they fail sooner or later than anticipated. So deficits, we obviously don't like to see deficits, and we will disclose this issue in the management findings letter if we see that the operating fund has been in the deficit for more than a year or two. We'll recommend to the board to investigate it and look at proper ways to resolve the deficit issue, and then the reserve fund will disclose that as well.
Okay, and to be clear, you're speaking more about a deficit of the overall corporation's financial operational position, rather than say perhaps 2 years in a row the current budget may end in a deficit, as long as the overall position, perhaps they've had a surplus that they're carrying over.
Yes, correct. That's right. So I'm speaking to the balance sheet, the statement of financial
Right.
position, where we see that.
Okay.
Whereas, yeah, you're correct. Like the profit and loss or statement of operations for both funds, you could have, a deficit in one year, but as long as your fund balance is still positive, then you're okay for now.
Absolutely. Okay, good to know. Yeah, because I mean, again, we all have those years that unexpected things
Yeah,
come up, but it doesn't necessarily mean it hasn't put us in a poor financial position. It's definitely manageable going
exactly,
forward. Okay,
exactly.
cool.
Like
All
the
right.
one
So,
thing that we've seen in the past quickly is snow
mhm.
events.
Oh,
You
I
could have
bet.
a
Yeah.
really bad snow year, but it was just that one year. So as long as your fund balance in the general fund had enough to kind of eat that loss for that year, then you're okay.
Okay. Yeah, absolutely. That's an excellent point. Yeah, snow overage in condominiums. That's yeah, definitely something you see one year and maybe not the next.
Yeah.
Fingers crossed for this year, folks. So we do have a few more forms. These ones will be sent following the draft financial statements, the approval for in the most case of the draft financial statements. So we're going to go through these quickly, very similar to as we did before. So we'll start with the adjusting journal entries.
All right. So basically, these are adjustments that we feel should be made to the financial statements. These are only recommended by us. Now, 10 times out of 10, our clients obviously input these into their system. And so we always ask for authorization to show us and for us to provide that, that these amounts have been accepted and approved.
Right, because they'll affect potentially if you're moving expenses, for example, from operating to reserve, right? It may affect those final numbers, and you want to make sure that your audit is accurate and that your closing balance for the year will be reflected in the opening balance the following year, right? So those do need to be taken again by CMG and applied to current fiscal year.
Well said.
Thank you. Next, we have the audit findings letter.
So this letter is really important. This is where we communicate with the board, not the owners, just with the board. If there are issues or any sort of internal control weaknesses that we want to point out so that, the board can tighten up for, future periods. This is where, you will see that. And then we'll even indicate, kind of activities or transactions that we see that aren't necessarily internal control issues, but that are strange, out of line that the board might want to keep an eye out on for.
Okay, cool. Next, we have a few different tax forms.
Okay, so there's typically two tax returns that a corporation has to file. Well, there's one definite one because a condo corporation is incorporated. You always have to file a T2 corporate tax return. Because a condo is not for profit, there's zero tax effect, even though you're filing these forms. So the T2 corporate tax return, we file that electronically for our clients. So we also have an authorization form for us to e-file that the client has to sign. And then the top one that you see there is a non-profit organization one. Now that return is an information return, as you see there, and a corporation only has to file it the year after its net assets are over 200,000 and or the interest revenue is over 10,000.
The latter of which we probably won't see for a little while in the current climate.
In the bigger condos you'll have that, but also obviously they'll have more than 200,000 in net assets.
Absolutely,
Sorry, not assets, total assets. I apologize.
Mm-hmm.
And this form we don't file for our clients. This requires a signature by a board member, and then it is mailed in to the appropriate body.
Okay. Interesting. And then our final form is the audit representation letter.
So this is most important letter that we send to our clients. This letter is the board telling us that it has fulfilled its fiduciary responsibilities um, with the management oversight of the corporation, um, and that it approves the audited financial statements. So on this letter, the board will put a date in which the draft financial statements are approved, and then as auditors, we use that date to date the independent auditor's report. We always tell our clients to, our property managers, that when you receive this letter, to send it to us to finalize as soon as possible, because any lag in between the date of the signing of this letter and when we send out the financial statements, that period in time, we as auditors, as accountants, we become responsible for any sort of major subsequent events. So, so let's say December 31st year end, it gets approved by the board by, let's say, March 31st, and it's dated March 31st, but then the PM sits on it and sends it to us, in June. If between March 31st and June, a big fire happens at the corporation and we're not aware of it because it's subsequent, we do review subsequent activities for audits, but if we're not aware of it and we issue it, and that fire obviously will come into question for liability issues, then we're responsible. So that's why we insist on the PM sending us the dated letter ASAP.
Interesting. Okay, good to know. Good to know. I see why we wanted to emphasize this one. That's a big deal.
Exactly.
All right. Well, okay. So, Tuan, you and I, we've crossed paths at plenty of AGMs, virtual and before the pandemic. You do often attend to present the audited financials to owners. What should owners pay attention to during yours or similar audit presentations?
Well, I think every firm presents it a little differently. We try to present it in more of a layman's terms, because not everyone is an accountant, not everyone is a financial expert. And so we do try to hit the highlights, the big numbers, so that you don't get lost amongst the trees. Anyway, so we explain it very simply so that everyone understands it. And then during the presentation, or sorry, after our presentation, if anyone doesn't understand the figures, because we always reiterate that these are your financial statements. Mm-hmm. If you don't understand, please ask questions for us, and we will be more than happy to answer your questions at the AGM so that you understand your financial statements.
Perfect. A question we've seen often from owners is whether or not the ownership need to approve the financial audit at the meeting. Now, you kind of touched on it when we were just talking about that last form, but the answer is no. So again, the audited financial statements are approved by the board of directors prior to even being presented to the owners, typically with the notice of annual general meeting package. And this is as per section 66-3 and 66-4 of the Condominium Act. What are one or two of the more common questions that you see at AGMs as the auditor, Tuan?
So the most common generic question, we obviously get lots of questions about more detailed issues, and sometimes we have to defer it because it's not appropriate for us to answer why the condo did or did not do something. But the most common generic question I get, and in fact I got it last night at a fairly big condo, was compared to other condos of the same ilk, are we healthy, or is our condo healthy? And I try to be honest with the unit that's asked, and I basically say, I'll try to answer the best as possible with a non-answer. Mm-hmm. And that the operating fund, as long as you break even with a little bit of cash flow, you're good. And then the reserve fund, you really have to go and compare it and reference it to your reserve fund study. Now, with that said, your reserve fund study, the moment it's done, over the next 3 years until the next one's done, it becomes out of date, day after day, depending on how your common elements behave, versus how they're thought to behave on your study. So that is probably the most common one is our condo healthy? And you may even have two condos with the same units, built maybe by the same builder, but maybe far apart. It could vary on the environment, on the building materials, on the subcontractors that were used. So yeah, that's the most basic common.
Yeah, absolutely. And speaking to your point just about the reserve fund balance, I mean, again, you could have a reserve fund balance that's tens, hundreds of $1,000s more than what your study calls for. But if you haven't, expensed, if you're not seeing any expenses, right? Those what's what I'm looking for? Those elements of your building, if they haven't been improved, the value is, yes, you see it in dollars, but you don't see it in the value of your property, right? So that's really hard, especially as an auditor without the same kind of context, say maybe as the board or the condominium manager who's kind of the feet on the ground have in terms of answering that kind of question, I guess, eh?
And that's a great point you brought up. That leads back to what I said before, is that as part of our audit, we review almost everything, especially non-accounting issues like minutes and contracts, to get a better picture of the corporation, because you have to remember, we see your corporation 3 days a year, and so we need to devour and take in as much information as possible to see that, oh wait, there was a discussion in the board minutes about roofs. Okay, so let's go take a look at the roof expense, to see if that jives with what was discussed in the meeting. So yeah.
Interesting. Oh yeah, for sure. Yeah, those minutes, they're very important. There's a reason they're so important, for sure. So section 60-5 of the Condominium Act allows for the audit to be waived for corporations with 25 units or less in the event that all owners, every single owner, consents on or before the date of the AGM. What advice do you have for corporations looking to waive their audit?
So, you have to consider that your unit is an investment. Whether you're there for 5 or 25 or 35 years, it's an investment. And personally, I would want my investment to be properly managed and to be monitored and reviewed. And especially with an audit, you have professionals. We have rules and regulations that we have to follow to perform the audit, and then it's a professional audit opinion that can be relied upon, in the court of law. So, I would recommend an audit, every year. And I'm not saying that because, to drum up more business for our firm or any firm, but purely just on, it's your investment. Now, there are condos that obviously do waive it from year to year, and that's as long as you're comfortable with a competent property manager, and have a good board, then I guess you can pull it off.
Okay, so in the interest of, say, a bit of cost savings, if a corporation in this position looking to waive their audit was maybe looking to undertake an audit on a cyclical basis, so rather than annually, we maybe waiving it every other year, or say every 5, 10, 15 years having an audit done, how often would you recommend that they do this?
I don't think I would probably, the longest I would probably wait in between audits is maybe a year or two. So because like I said, it's an investment. You kind of want to know that, your financial statements are in a good shape and that it's been reviewed by, accounting professionals, so that, your investment is protected. From an auditor's point of view, to get, to set up a client is very, very costly. And so, that time cost is then billed to the client. So, if you're only getting an audit done every few years, every time, we get a new client, because if you skip a year or two, you kind of become a new client because we have to get to know you all over again and set you up in our system. We take the financial data that the management firm gives us and input into our system so that we can then do our testing and reviews and all that. And so when you are doing, sort of cyclical audits, they will be a little more expensive than if you were to actually do audits every year, because we don't have that first year set up every year.
Yeah, absolutely. So we're running very, very short on time, but I want to get to one last question in the Q&A. Can the audit uncover financial improprieties or inapproprieties, fraud, or operational issues from the property manager, or is the scope of the audit only limited to ensuring that the financial statements are fairly and accurately presented?
Yeah, so our opinion is that the financial statements are fairly presented, material fairly presented. The fraud, we make sure that that the board of directors have in place, or have implemented internal controls to mitigate any potential for fraud. And like I said before, in our audit process, we have a materiality level that we use in order to review the documents.
Okay, awesome. Thank you so much. So we've talked a lot. We're wrapping up now. So what are your key takeaways for our directors who have attended today, Tuan?
I think just as a director, just really take a keen active interest in your investment. You're not on the board to pad your resume. And one point to keep in mind how important your role is on the board is that you have insurance, directors and officers, liability insurance. So that should be a clue that your role and position is very important when you do join. And don't take the financial information from your management firm, your PM, as they're 100% right. I'm like most firms are quite good, but if there's something that doesn't sit right, don't be afraid to ask questions. And if if you're a director, like I mentioned before, if there's something that you think smells and is really wrong, reach out to your auditor, because you are our clients, not the management firm, not the PM, and we can definitely talk it through. Yeah.
Perfect. Great. Awesome. Well, thank you so much. Thank you so much again, Tuan, for discussing audits and the audit process and going through all those forms for our directors today. We'd also like to thank everyone for joining this 3-part webinar series about our money and why it matters. From everyone here at CMG, we hope you all have a safe and happy rest of 2021. CMG Express Web Series will be back with more Express Web Series content in 2022, kicking off in January with conversations about the CAO and the CAT and some upcoming changes. The CMG team is proud and honored to serve the board and owners of your communities. Thank you all so much for your time this afternoon. Have a great rest of your day.